Hey, good morning, everybody, and welcome to What's Hot on the Open here at MarketStream.live. My name is Joe Cusick here with the Cusick Group, securities offered by MoneyBlock. Taking a look at a market that is opening up basically flat to slightly up. But let's just talk about the market in general. With earnings going on, all the political, both domestically and geo, going on, there has been quite a bit of movement, but it's been, for the most part, in this month of January and going into now the new month of February, dull. Basically, you've seen that the S&P 500 has been flat for the last 13 days, basically edging up over 228 and then challenging 229 on the spiders. If you take a look at the NASDAQ, the Qs have done a steady advance to the upside, but it's been a grind. If you look at the Russell 2000, had a small correction, declined about 4%, and then resumed an uptrend, but still it's been a grind. Basically, you're looking at the last few weeks being mixed, and it's gotten traders confused. And so I wanted to just put this in perspective. The long-term trend is clearly to the upside. And so when we look at this on a day-to-day basis, I just want you to know that this is a micro perspective on most days. But today we're giving you a macro perspective where we want to look at it and basically say, you know what, it's been a grind. Most of the major averages have been in a range, and you have to be disciplined. The levels that we're going to be watching, that need to be broken are going to be like the high on January 25th on the S&Ps. That was about 8 days ago. We're going to watch the high on the Russell 2000 that was made on January 4th. That was over 22 days ago. You can also look back on Monday's move where the Qs made a new high. So that was the NASDAQ. So it's been a little bit frustrating from a trader and investment perspective, but you need to be focused. So where are the support levels that, if broken, then maybe the bears could have a little bit of traction, but it's also an opportunity for those that are not in the market to start taking a look at the overall market and start building into your positions. On the spiders, watch 225. That's the S&P 500 ETF. The Qs, which is the NASDAQ ETF, watch 122. And if you're trading the Russell 2000, you could look at IWM or IJR. Look at IJR. 67 is the level that you can look at. That is an area that if it holds at any one of those levels on any three of those indices, that means that the bulls have taken back control and you could see some potential challenge to the upside, especially volume. A break there means that we have basically an uptick in selling pressure, which we haven't seen in the last month and a half. All right, taking a look at some other markets this morning on the open, crude oil. If you take a look at either the futures contract, which is the March West Texas contract, which is the CL underlying, or USO, it basically looks like crude has been forming what we call in the chart arena an ascending triangle. In other words, it's been trending to the downside. Looks like 54 on the West Texas contract or 1160 on USO is a firm resistance level. It does have a support level that's been rising with the 50-day moving average. That's the moving average I use for midterm support or resistance. In this case, it has been midterm support for USO and West Texas. But this morning, with the break of West Texas crude through $52 or through $53, now 52 and some change, it's now resistance. So you see that the crude contract has come into pressure. Also, taking a look at the currency markets, you hear a lot of talk about the US dollar. And right now, the US dollar remains under pressure. If you look at either the DX contract on the future side or UUP on the ETF side, which most of you have access to, it's been in a downward trend channel, even though you see that it's over the 100 mark. Basically, from January into February, the dollar has been trending down to the downside. watch the 50-day and the 20-day moving averages on the dollar using UUP or USO. A break there means that dollar bears have started to take control and the bullish nature of the buck is coming under pressure. That could have ramifications globally because you then see some more volatility in the currency markets. The yen was weak overnight, but again, there's, as we've heard from commentary out of the Japanese government, they'd like to see some yen strength. Dollar weakness would help that situation. The euro has been mixed, and you're also seeing individual currencies like the British pound has been mixed. Again, like to see some strength there if dollar weakness continues. Bonds appeared to have found some buyers early, but again, on the bigger picture, it looks like the long-term trend is going to be the downside. So I don't want to paint that picture in the bonds as if all of a sudden there's going to be a bid. In other words, yields are going to start pulling back, prices are going up in bonds. I'm not saying it. In the short term, that has looked like it's been happening. That could just be an indication that there might be a little bit of a retest of the levels on the equity side that we saw for support tests. Gold has staged a pretty decent breakout right now at this juncture, just getting over its January highs. That could just be indicating that there is a transitional phase off of the December bottom. We're going to watch that one very closely, but gold could come under pressure if any dollar strength does resurrect itself. All right, folks, there have been quite a few earnings announcements that we're going to cover at 1:30 Eastern Time, see how they play out over the course of the midday action, and we'll cover those in Strategy Now here at MarketStream.live. All right, we'll see you then.